Hey, what's up, YouTube? Yeah, you read the title right. It was a $10,000 day basically trading micros. Most of you know I'm using multiple accounts, but still, I mean, that was just a bang up day for me. I had to wait all day for my setup, and it just paid off. So I thought this would be a good video to make to try to help people that are trying to mix ICT and IDR together. I'm having a lot of success doing it, and I want to kind of share that information. And also, people were asking me how I was figuring it was a false day. So I'm going to go over that too, as far as the DR lens data. So this was the day. So I'm at this point I need $225 to pass the first 10 evals, and then the other 10 are already halfway there. So I'm just ecstatic that this is going this well. I'm surprised as anybody. So here's the contracts. I had 60 contracts that I traded on my lead account. These were all micros. I went in lots of 5. And what I found was, I don't know if I could have withstood this drawdown if I would have been trading contracts. I certainly wouldn't have been able to take partials and add to the position and all of that. So I gave myself a lot of flexibility. I felt real comfortable with the room I was giving it. I'll typically give a trade 5 or 6 points with a contract, looking for just 1 to 1 or so, trading ICT. Um, so with 5 micros, I was able to give it like I had 10 points available. Is kind of what I was thinking. So I was down here at one point, but I was constantly adjusting as I saw, as I remained confident that the plan was going to play out. If it would have broken in a way that signaled to me that it was not going to work, I would have just got out. But I kept seeing I kept seeing the lows come down, and just barely take out the previous one and then shoot back up. And this was my signal right here. I saw this stop hunt right here, and I had purposely pulled my stop loss way down here because I always anticipate this before one of these huge moves like this. So 7 out of 7. I mean, you can't complain about that. It was just a great day. Um, so let's get to what is that? Same thing. Okay. So here was the trade, and I'm gonna back into how I was using DR to do this. Um, you know, maybe let's go to the bigger view here real quick. So here's the overall view of ES today during New York. There was a lot of activity, a lot of opportunities for trades. I was kind of talking to a buddy who's learning to trade, so I missed a little bit of this, but he was telling me about these huge moves and these huge candles. I was out on the deck, and when I went back in, I looked at it, and I saw this coming up this way. My bias was long because I saw, this here, and for some reason, this I just didn't see enough on the downside to make me anticipate low, short. So I was kind of thinking in the back of my mind, that it would go long, and then it kind of confirmed with these equal highs. Um, as I was suffering through this trade and this drawdown, I had my eye on these equal highs, on this liquidity, and then all the liquidity that was being generated in here with all this up and down garbage, right? All this liquidity, right? So this is what I saw. Here's the equal highs. The DR's top is over here, but I also saw all this. And sell side had been taken pretty nicely for this range, so I just had it in my mind that this was going to go long. So I went and checked the DR lens. I've made videos before about at least being aware of what a false day would look like. Okay, it doesn't happen very often, but if you can use it, and some days, and I'm going to show you the DR lens data, some days the false days are dead ringers, and this was one of them. It's only happened once before at this time of day with this confirmation and this combination of retracements and everything else. So when I saw that, I just jumped in the trade about 1 o'clock. Okay, I was up here somewhere. So this is where I jumped in. Now, everything about this is screaming short. I mean, you've got this big push. You've got this huge 5-minute fair value gap, retested. This is short all day long. But when you see what I saw in the DR Lens data, I've learned to trust the data over everything. If it's clear enough and it's, I mean, it just jumps out at you. And some days you get that. Some days, there's one bar, for your retracement or your extension or what have you, and it's got 40 on it and the rest of them have 2 or 3. Stuff like that, if you catch those days and you capitalize on them, you can have a lot of confidence. You can put size behind it, and those are the trades you want to try to find and try to take. So they're worth waiting for. So I felt like it was a crappy entry. I should have waited for the pullback, but honestly, I just wasn't sure how long it was going to take to get there. The DR Lens data said last 15 minutes of the session, and I'm going to get to that as far as my mixing DR and ICT. But I didn't know if it was going to pop up and then come down. I wanted to get in as soon as possible, so I jumped in right here, right in the middle of all this mess, right? But I had confidence. I mean, this was one of the lowest stress trades I've taken just because of the way it kept giving me confirmation in the ways it was making, the higher lows, stop hunt. All this was just indicative of what I was expecting. So the DR Lens data looks like this. And you can see that there's been 2 combinations of this day false at 12 o'clock. Okay. And for some reason, there's only one record of the retracement and the time and the extension. There's 2, I'm sorry, but they're both the same. So the 2 times it happened, it did the exact same thing. So when you see this, it doesn't look like there's a lot of data to use, but that's in your favor. That's telling you that the last couple times you had this combination, it did the exact same thing. There's no need to try to figure out, okay, which false day is it, which retracement false day, which time extension, all of that. It's basically telling you in 20 years, this combination has only been hit a couple times, and both times it pretty much did the same thing. So when I saw this, I was amped. I was like, okay, yeah, I'm getting in, and I'll risk my my normal risk because this has worked out very well for me using these, especially the max extension time. The last 15 minutes. There's only one block here, and it's 15:30 to 15:45. Well, no, it's 2 blocks. Sorry, 15:30, 15:45, and 15:45, 1600. So if you were to stretch all this out, there would just be 2 bars over here equally high saying last 30 minutes, I'm taking the top off, basically. Since you're in a false day, you're looking at retracement. And the extension is 12:15 to 12:30. There's 2 records, but it was the exact same thing. So both times it happened, the max extension was at 12:15 to 12:30, and it was 0.4 to 0.5 one time, and 0.7 to 0.8 the other. So if you go look at the chart, and I marked this up, okay, so I marked up the 12:15 time right here, and the 0.4 to 0.5. Now you can always count on this being adjustable for a tick. If you've ever had a fair value gap get away from you by 1 tick, you know what I mean. There is a tick worth of leeway in the market. There just is. So and to try to counteract that, when I draw my fair value gap, if I'm going to draw a fair value gap right here, I'm taking it down 1 tick. I'm always going to account for that 1 tick because I've seen it, and in my back testing, there was a statistically significant number of times when it seemed to miss by 1 tick. So adding the tick's nothing. If you win a 6, 7, 8, 10 point trade because you added a tick every time, that more than pays for itself over time. So if you're running into something like that, just extend your fair value gap a tick. So in my mind, this is 0.4, right? Close enough for government work. And this max extension, 12:15, 12 to 12:15, close enough, right? That's I mean, it just jumped off the charts at me. That's why I jumped into the middle of this, going against the grain, and I had a lot of confidence that this was going to go my way. And I had waited out, and in the course of waiting it out, since I was using micros, I was able to, keep my stop low enough. I would move it down because I didn't want to get hit with a stop hunt, but then I was also, as it moved up, I would bring my stop up to just protect, knock some of the risk off. But if it came all the way back down, I still had my full stop loss in mind, and I was pulling it down. And good thing right here, because it really jabbed down. And when I saw this, I knew it was on, and I had my finger on the buy button again, but I was like, you know what? Don't be greedy. I'm so close to passing this challenge, and I just wanted to relax and just watch it go where I knew it was going to go. So, if you think about it, it's worth just knowing where the false data is, a false day data, because if it's clear enough, that's as good as being able to take a retirement setup. I mean, it's basically, from down here somewhere that it's going all the way up to the top. It's a reverse retirement setup, I guess you'd call it. So if you didn't know it was most likely going to be a false day, you might have started getting in right here thinking it is a retirement setup, depending on what time it was. And it's still a little far from the IDR, but it's only, 4 points to right there. And I have been known to, if I think it's a retirement setup, I'll just take it, because the odds on those when they hit are so good. The risk reward is so good that I didn't mind, because I knew if it did do that, it was going to come all the way back down here and take out the sell side. So that's I've done that in the past and had success. I've had done that in the past and I've been wrong. So either way, but I'm kind of antsy. It's hard for me to wait till it gets all the way up here. If I know I'm within my risk parameters, I'll use that as my guideline where to get into the trade. So it's either going to come up a little bit more, put me in a little bit of drawdown, and then turn around and dump, or I'm just going to get stopped out with what I planned on getting stopped out with. So that's okay. So as far as like mixing it with ICT on the minute time frame, where did I put that? Bear with me. On the minute time frame, I'm seeing these fair value gaps, right? And I see them respected. I see the pump. I see the retracement. Really nothing in there to worry me too much. And I see another one here. And technically, this is my model right here for like the silver bullet. You get a break of market structure right here, energetic move, fair value gap. I get in, and my stop loss goes down here. So had I waited, I could have caught the most opportune point to enter, and started my buys down here. But I didn't know this was going to happen. I knew it was going to be a false day, or had a good inclination it was going to be a false day, and it was going to head this way. So I got in early. But the ICT portion of it was just as effective. It showed me what I wanted to see. So I had it on the DR side, and I had it on the ICT side. Here we go again, right? Big push, stop hunt, fair value gap, respected, push, another fair value gap, turns around. And then we get this, right? And I'm still seeing gaps and little bitty fair value gaps right here, fair value gaps, more to the upside than the downside. And price has been sitting here for a long time, right? And the sell side is getting farther and farther away. It's less likely that it's going to hit. And, if you're a smart money type of trader, your eyes are on the liquidity anyway, right? You're always looking for the levels of liquidity that the market's going to reach to. So all of that, put together, this was probably my most complete trade ever. I was smart. I traded micros so I could take partials. I could add to the position. I had a comfortable stop loss. I'm really going to try to implement, that type of pattern, more regularly. This was a day where I just decided, I'm gonna do it like this, because I'm tired of seeing, I'm not going to take my profit when I get 3 points. I'm going to add to the position. I'm going to take partials, and it took getting used to Trade-Evade and being able to set up the multiple bracket orders, manually, so I could move those around and have them up there. That kind of made that possible. I'm still growing and evolving as I learn this platform and try to apply these concepts. I just hadn't got there yet. But today, I noticed last few days I've been trading kind of scary, and I know some of it was news, holiday, and all that. But my P&L went down. Granted, because I was trading micros, but I was also getting close to the finish line, and it was starting to affect my mindset. I just really didn't want to go backwards. I'm so close, so close. And I just decided to throw that out and just trade like I'm supposed to trade. I went back to like I was trading a couple weeks ago when I was having these huge weeks, and I just trusted the data and I trusted the concepts. And if you do that, and you have the right setup, more often than not, it's going to win. I mean, this market is geared to run this way, and we sort of have the keys to the kingdom with really the only two smart money concepts available. I mean, it's either ICT or DR. They both work based on algorithmic principles and the idea that this is a manipulated market. So when you put them together, and the confirmation, one can back the other up. If you're not seeing what you want to see in DR, well, you've got ICT going the other way. You still got your opportunities to enter. And in this case, the data was actually the biggest factor in me being able to get into this trade. I wouldn't have got into the trade if I didn't see the data, because, like I said, this is a strong model right here for taking a short, and I had to have confidence that this wasn't going to come up and then keep carrying on. You'd think it wouldn't make it. This would have been my stop if I'd have took that trade. Here would have been my stop. So I'd been very comfortable taking this trade. Huge break in market structure, 5-minute fair value gap, retest, boom, I'm in. But because I saw the data, I decided to trust that, and I saw the liquidity. So it was kind of a everything just came together with the concepts I've been learning and trying to apply. So I can't think of much else. I know that when it started to scream up right here, at one point I had to go to the store. I took my tablet with me, and because I had to go, I had to get something, and I had my tablet on my seat next to me, and I actually carried it into the store with me. The guy probably thought I was a loon, but this trade was on, and I was in this mess right here. And when it finally decided to take off, it's just the coolest feeling to see this do exactly what you're literally betting a good chunk of change on, and it confirmed itself over and over and over in here. I had a lot of confidence. So this stuff works, man. I mean, it works. You just gotta, be patient, figure out your rules, your criteria, how you want to put it all together, and make some, some keynotes, some points about understanding where liquidity is, and always factoring that into where the market's going to go. Factoring in, the false day, have that information up here somewhere, or mark it out some kind of way that when it gets down here, you're not surprised. You're like, oh, okay, that's high probability false day. Let's see what it does from here. And if it starts jacking on up here, then you kind of know what to do. You're going to hesitate for the retirement setup and save yourself getting stopped out. Because if you'd have took the retirement center, you would have also lost. So the data was right. Some of the models kind of acted secondarily toward the, next to the data. So trust the data, trust the concepts, and I think that's it. Y'all have a great day.